Imagine this. Tomorrow morning you wake up, check the silver price on your phone, it says $34. Feels normal, right? Now imagine you walk into a coin shop in Dubai, and the guy behind the counter looks at you like you're from another planet when you offer 34 bucks. He slides a 1 kilo bar across the table and says, "That'll be 170 per ounce, cash only, and I'm already losing money at that price. $170. For real metal, not paper, not some futures contract that can be printed out of thin air. Real physical silver that you can hold, bite, drop on the floor, and hear that perfect ring. That's not happening tomorrow. That's happening right now. Today." While most of us are staring at the Comex screen like it still matters, the real market has already left the building, and it's not coming back quietly. Hey, it's Chill Guy here from the Asian Pro, and if you've been feeling like something is seriously off with the silver market lately, you're not crazy. You're just one of the few people paying attention to what's actually happening on the street instead of the screen. So if you're into real money, real assets, and not getting wrecked when the system finally breaks, smash that like button right now and subscribe, because this channel is where we call it exactly how it is. No sugar, no hopium, just fact. Let's start with the part nobody on financial TV wants to talk about. The United Arab Emirates is currently selling physical silver at $170 an ounce. Japan is at $150. China is at $140 and climbing fast. These aren't typos. These aren't shady back alley deals. These are retail prices at legitimate dealers in countries that actually make things, that actually need silver for solar panels, electronics, EVs, medical equipment, everything that keeps the modern world running. While the paper price gets smacked down every time it tries to breathe above 35, the physical market has completely detached. This isn't a premium anymore. Premiums are 10 bucks, 20 bucks when things get spicy. This is a separation. The paper market and the physical market are now living in two different universes, and the gap keeps getting wider every single week. And here's the part that should scare the hell out of anyone still trusting the Comex price. Dealers are starting to go no bid. You know what that means? It means when volatility spikes, when the paper price gets slammed, some of the biggest physical dealers literally stop quoting buy prices. They'll sell you metal all day long at these insane markups, but try to sell metal back to them when the smash comes? Good luck. They vanish. Radio silence. That's not normal market behavior. That's what happens when people who actually move physical metal know something the rest of us don't. Because here's the dirty little secret. The supply chain squeeze that started 3 years ago never actually ended. It just went quiet for a while. All those refineries that got shut down in 2020, most never came back online at full capacity. All those mines that cut production when silver was 20 bucks, they can't just flip a switch and start pumping again. Mining is a 10-year lead time business. And now the same countries that make everything, China, Japan, UAE, they're all hoarding metal like it's 1979 all over again. But this time it's different. This time they're not just buying because inflation. They're buying because they need it to build stuff. Solar is exploding. Electric vehicles need silver. 5G needs silver. The green revolution everyone keeps cheering for, it runs on silver. And there's no substitute. You can't make solar panels with copper. You can't make EV batteries work efficiently without it. Silver is the highest conductor of electricity on planet Earth, and we're burning through it faster than we've ever mined it in human history. So when the paper market tries to tell you silver is worth 34 bucks, while the rest of the world is paying 5 times that for actual delivery, what's really happening is simple. The paper mechanism is losing control. It's always been a rigged casino, we all know that, but now even the casino is running out of chips. The shorts can keep printing contracts all they want, but at some point someone shows up and says, "Okay, I'll take delivery." And when that someone is a sovereign wealth fund in the Middle East or a solar manufacturer in China that actually needs the metal next quarter, the game changes. This is what a liquidity squeeze looks like in real time. Not bank failures or stock market crashes. Those are symptoms. The real disease shows up when physical pricing permanently disconnects from paper pricing. And once that happens, it doesn't quietly reconnect. It escalates. Fast. So what do we watch next? 3 things. First, lease rates. When central banks start leasing out their silver at negative rates, or when they stop leasing entirely, that's your signal the vaults are getting empty. Second, delivery pressure on the Comex. Watch the open interest versus registered inventory. When those lines cross and the registered keeps dropping while open interest explodes, someone is about to get force-fed a very expensive lesson. Third, dealer spreads. When the bid-ask spread on physical metal goes from kinda wide to, "Are you kidding me?" that's when you know the reset is already here. We're seeing spreads in some markets that haven't been this wide since 1980. That's not a rally. That's a structural breakdown. Look, I'm not here to scream the sky is falling. I'm here to tell you the sky already fell. Most people just haven't noticed because they're still staring at the wrong screen. The Comex price is becoming irrelevant in real time. The price discovery is moving to Shanghai, to Dubai, to Tokyo. The East is setting the price now, and they're setting it with cash, not contracts. This isn't a normal rally. Normal rallies have pullbacks. Normal rallies have profit-taking. Normal rallies don't come with dealers refusing to buy back metal at any price. This looks a lot more like the early stages of the last great disconnect, the one that took silver from $35 to $850 an ounce in less than 3 years, back in the late 70s. The difference this time? We're starting with way less above-ground supply, way more industrial demand, and central banks that are buying instead of selling. Do the math. So if you've been waiting for the perfect setup to stack physical metal, congratulations. You're living in it. And if you think this disconnect is going to fix itself quietly because the Fed says everything's fine, I've got bad news for you. The real market has already voted, and it's not even close. This is Chill Guy from the Asian Pro. If this video woke you up even a little bit, do me a favor. Drop a comment below and tell me what physical premiums are looking like where you are. Are dealers in your area going no bid yet? Are you seeing the same insanity? Let's get this conversation going, because the people who see this coming early are the ones who won't get wrecked when the rest of the world finally figures it out. Smash that like button if you're stacking physical right now, subscribe if you haven't already, turn on the bell so you don't miss the next one, and share this video with that one friend who still thinks silver is just a volatile side bet. Because what's happening right now isn't a side bet anymore. It's the main event. And it's just getting started.